Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Cardano's ADA, reviewing the most recent price action and what I think is likely to happen next. Now, as I get into today's video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the YouTube channel, why not go ahead and subscribe? Tapping the bell and selecting all the notifications will enable you to be kept up to date with all the videos that we do here at Cheeky Crypto. If you're watching this on X, then why not go ahead and give us a follow? Really do appreciate that, and repost this to as many people as possible. Help spread the content to more like-minded individuals and grow out that cheeky community. Let's go ahead and jump right on down into the desktop and take a look at what's going on here with the price action of ADA. So starting things off on the 1 hour time frame, this is ADA paired up with USDT on the 1 hour BitGet exchange, and or the 1 hour time frame on the BitGet spot exchange. We can see that from the last video, we had this idea of shorting the market, looking for a move to the downside. Our targeted hasn't changed. We still fall within this structure where we're targeting out 21.93 to 23.02. Now, as you can see, we had this idea of a short position. We'll probably talk more about the trading opportunities later in the video, but you can kind of see that we have started to slip down into this profit green area where we are looking for this move to the downside. Now, when it comes to the structure that we're in, we're tracking a 5-wave impulsive structure. Okay, the structure in itself has a few key things. One, invalidation. The wave 4 is not allowed to cross wave 1. Okay, so in this particular regard here, we can see that that invalidation line comes in at 28.22 cents. We're not allowed to cross this line. If we do, then it means we break this structure and we do not have a 5th wave to go down into. And if we were to go down, it would be a different pattern and a different structure. Now, because our wave 4 here actually rallied up a little bit higher than our estimated area, we can actually go ahead and adjust our targets. Okay, because what's going on here, the higher that wave 4 goes, the lower that wave 5 will go. Okay, and you can see down here that our target has gone down a little bit deeper. It is now 21.7685 to the 22.9617. Okay, so the higher that wave 4 goes, the lower that wave 5 will go. Okay, cool. So knowing that we are still below the invalidation, we're in our impulsive structure, we're looking for 5 ways to take us down into our low range here. And we're going to focus in on that right here by zooming in on this recent structure. Okay, so here we can start to see we're slipping down. We've come down in what looks to be a pretty steep extension. To me, this looks like the overextension within a wave 5, and we can do some sense checks on that. So for example, we can see this little mini move here comes on over. Let me see if I can actually grab the. I always struggle to actually get this. Let's go ahead and see if I can find a good way of actually doing this. I'm just going to send this to the back so it gets it out of the way. There we go. He says, now I still can't grab hold of that. Let me try and deselecting it. There we go. So if I move the fib chart over to here, we can see that we easily push down lower than the 1.618. And so straight off the bat, we know that we are very impulsive in the way that we went down here. So to me, this looks like we are in a wave 1, 2, 3, up for 4, down into an overextended 5. Okay, now we might think, well, why is that not the end of our wave 1 and this is the wave 2? It's possible that it is, but it would make a very irregular decision. It's possible. And to do that, we again would do the sense checks to see whether that fits. Because it is a possibility within that structure, only if we hit 1.618 here, which we do, but we do create an overlap, which is fine for a diagonal. So it could be that actually our structure is 1, 2, 3, 4, 5 like this, and it becomes an expanding diagonal that would look like this, and it would expand down like so. Okay, this will allow us then to look at this next pattern right in here as a 3-wave correction, and then we're into a 5-wave drop. Okay, and the reason that I want to kind of give you these kind of options is it allows us to look at this through slightly different lens. We either have an overextension, or we are, in fact, just looking at this as maybe a zigzag pattern. Considering we are in a 5-wave structure with a 5th wave moving down here, I suspect it's an overextension because we haven't yet hit 1.618 on our low range target here. That would happen at 25.6. And this straight drop move to the downside, it might not be finished, but I suspect it probably is, meaning that we actually are going to be looking, in my opinion, for a move to the upside. Okay, so I'm going to go ahead and take this off. I think that's one potential scenario, but not the one that I think is likely to be playing out. Instead, I think 1, 2, 3, 4 overextension into 5. This allows us then to think of, okay, well, we might be looking for a move upwards. Where are we going to go? And we'll target out 50% move. So basically, we'll be looking at this previous area here, about 26.5, upwards towards 88.2%, putting us to about 27 cents. Okay, that means that we're likely to see a move up higher into this range, and it should be a 3-wave pattern to get us there. Okay, that allows us then to look at our next move to the downside. This also happens to be another area of interest, which I'll talk about later in the video. Now, if we come on down, our next move would be a 5-wave structure like this, very impulsive, gets us down towards our target, but not yet in the target. We'd have another bounce before finally finishing this off in either a diagonal structure or an impulsive structure to get us into our zone, right back down into the low areas here of this 5th wave move. Okay, so that's kind of where that looks on our hourly chart. There's a lot of things to kind of be thinking about. I'm going to remove a lot of this because it's just going to be noisy on the chart. We don't need to see all of those little shiny structures. I'm going to leave this little yellow box here for now, and I will leave that there as well. Let's take this up into a daily. Our daily time frame looks very much like we are still in a wave 3 position. We haven't finished that. So that 5th wave that we're looking for on our 1 hour time frame essentially is going to be completing a wave 3 on our daily time frame. Okay, this will then mean that we'll have a little wave 4 up, another wave 5 down, which will complete a wave 3, which will then mean another wave 4 upwards, which will then mean another 5 wave down, which will complete a C wave. So anyone who follows this, it's basically nested structures internally. We have a big wave 1 up to a wave 2. We have this kind of 5 wave drop in the middle for a wave 3. We've got a bounce to wave 4, go down into a wave 5, which will take us into completing a wave C, which also puts us right down into our accumulation zone, which I'll talk about on the weekly chart in a moment. So it can be quite complicated, but I can try to break this down in an example. Okay, so when we have a 5-wave structure, let's just draw one in here. When you start with a 5-wave pattern like this, you must end in a 5-wave pattern. There are 2 different types. There's the 5-wave drop here. This will be followed by a 3-wave correction. Okay, and it would then be followed up by another 5-wave move to the downside, like so. This is called a zigzag pattern, which essentially is an A, B, C structure. Okay, so basically an A wave pattern contains 5 waves, a C wave contains 5 waves. It's called a zigzag. Okay, now when we take a look at this, we're looking at this C wave being a zigzag. It contains 5 wave moves. Okay, so when I go ahead and remove this, when we take a look at the kind of 5-wave pattern in itself, it would look like this. And this is also commonly known as a 5, 3, 5, 3, 5. Okay, and a 5, 3, 5, 3, 5 is basically this 5-wave impulsive pattern. Okay, now this is important because a 5-wave impulsive pattern like this and the numbers that are associated with these are quite important. The 5 represents 5 waves internally. So there's a 5-wave structure inside the wave 1. There would also be a 5-wave structure inside our wave 3. Okay, and there would be a 5-wave structure internally within our wave 5. Okay, and of course the 3 waves sit on the 2 corrections, wave 2 and wave 4. Okay, so it's a 5, 3, 5, 3, 5 representing 5 waves down, 3 waves up, 5 waves down, 3 waves up, 5 waves down. Okay, it can be a little bit complex, but for the most part it's actually quite simple to understand. And when we start actually mapping these kind of moves into our charts, what do we see? Well, we see a 5, 3, 5, which is yet to complete, up into 3 and down into 5, which obviously is a 5-wave pattern for a C-wave structure here, and obviously that's part of a much bigger drop to the downside that we saw previously. So essentially for Cardano, this looks like the ending structure for our moves on the daily time frame, right? So we're bearish, we're below the 50 EMA, we're below the 200 EMA, we're in a C-wave pattern that's yet to even hit its minimum expectation. The minimum expectation is going to be the 22.0439, a double bottom. And other than that, you can kind of see that we're nesting down these structures that are taking us into these nice low areas, which brings me on to the weekly chart, because the weekly chart shows us with our C-wave pattern right here, which actually is a part of a Z-wave pattern over a much bigger bear market. It's basically a W, X, Y, X, and Z. I'm not going to go into that today, but essentially you can see the ABC structure sitting inside the Z wave, and the Z wave looks to finish right here between 15.21 and 18.11, and that essentially is where I think the bear market is likely to end, at least at this point in time. Okay, now, of course, we can take a look at this as being a B wave pattern over a multi-year cycle for ADA to the upside, but I get criticized for talking about those price predictions on these videos by so many people in the comment section who really struggled to understand it. But for the most part, we are where we are. We're heading down to the accumulation zone that we had mapped out for quite some time. We don't necessarily know the journey there, but we can see that actually we've got broad area of accumulation, basically 8 cent to 19 cent. I suspect that this area of 15 to 18 is the key area for us. And I suspect this because this is a previous area of resistance and consolidation that we're just looking to hopefully turn it into an area of support for us, but also happens to fall in line nicely with our expectations on that C wave, which will be 1 to 1.236 on the fib scale of the A wave structure. So all in all, this seems to be the most obvious area for support, and most obvious area for reversal, and a big bull market start for ADA. Could be wrong on that, but for now, that's kind of where it sits. Let's go ahead and bring this up into our data. Now, on our membership website, membership.𝗕𝗘𝗪𝗏𝗀𝗧𝗏.io, we have basically got so many different things available for memberships. So much I can't really even talk about them all in this particular video. It would just, wouldn't do it justice. So you can browse this at your leisure. There's lots of different plans that you can get, lots of different perks depending on what you kind of resonates with you. Some people are not traders and therefore they don't want trading information and stuff like that. But sometimes they want to know what we're doing. They want to get alerts about, whether things are in buy zones, in which case, there's perks and stuff for that as well. As well as course material, learning Elliott Wave theory in a lot more detail. It's a 21 or 22 part video series that I put together on Elliott Wave theory that explains all the structures. Right, all these things are available here, and there is a 7-day free trial across all plans as well. But today we're just going to focus on one thing that we have available for our members, which is the data zone and the data for Cardano. We're going to bring this on-chain data up, and we're going to just reflect on some of the things that are going on here. So, overview. The 35 billion in circulating supply. Not too bad, not too great either, but I'm less concerned about that circulating supply when we see total value locked growing. All-time high sits at $3.10, and it's been 718 days since that all-time high. We're currently 91.3414% down from the all-time high, and that's not too bad. But did you know that the average transaction value sits at $34,000 for ADA, which is pretty astonishing considering there's 51,000 transactions in the last 24 hours. It only costs $4,747 to essentially move thousands upon thousands or millions upon millions of dollars worth of value across the chain. And that's quite an astonishment and very much an accomplishment. So 51,967 transactions at a total cost of $4,747. The average fee paid by everybody who wanted to do a transaction was 0.3374 ADA. So very, very efficient. Not the most efficient blockchain out there, but efficient nonetheless, and dwarfs that of Ethereum, for example. Ethereum is just stupidly expensive for the transactions that it produces. Now, moving over to liquidations, there's not usually too much on the way of liquidations when it comes to leverage positions on Cardano's ADA. $906,000. Binance was the exchange with the most amount of liquidations at $309,000. 63% were long positions and 36% were short positions. Binance was 34% of all liquidations. OKX was 32%. Bybit was 29%. Huobi was 2%, for example, right? So we know, for the most part, liquidations are not unusual or uncommon, and it is what it is. As we kind of move over into the wallet counts, we get some more interesting pieces of information. We can see price going down, but yet accumulation occurring, which basically tells us that we're seeing large investors with over 1 million ADA or more actually growing here. Okay, so over the last 365 days, they're actually down 0.35%, as in 365 days ago, there were 2,850 wallets that had over 1 million ADA. They were aggressively selling into the lows, into the kind of November lows, and then it started to accumulate, specifically as we hit the new lows in June 2023. In the last 180 days, it's up 2.97. Last 90 days, it's up 4.41. In the last 30 days, up 2.05%. And in the last 7 days, the wallets have grown by 0.25%. This shows us that there's more accumulation happening at the wealthier levels. Now, as we go down a bracket to the 100,000 ADA or more, we can see 5.92% in the last year, 3.25 in the last 180 days, 2.33 in the last 90 days, 0.91 in the last 30 days, and 0.22 in the last 7 days. We still see that these guys are holding strongly. The light blue line are the number of wallets holding at least 100,000 ADA, and the price action is the dark blue line. So we can see price going down, wallets accumulating. This is pretty much consistent across the board, and we also see total value locked growing. This is actually giving us some pretty decent predictions in terms of where we think things are going in the future, because it shows that there's actually a lot of accumulation happening, specifically as price goes down, and this is actually a positive sign for the next bullish market. So what's in the news? Well, not terribly too much. We've got a few things of interest. So Cardano's downward journey, ADA price nears 0.25 with the potential to soar to 33. Ultimately, it's a little bit of trading stuff in here. Nothing of note really outside of what we've already spoken about in terms of the chart. But I did find this one also interesting. This one is Cardano rolls out a new Hydra version to scale to 1 million transactions per second. Is ADA poised for a major price breakout to 35 cents? Ultimately, I think there's just a lot of people kind of calling out various different things, but for the most part, there's some interesting things in here. New Cardano Hydra release version 0.12.0 supports Cardano node 8.1.2 and mithril bootstrapping. New API endpoints, improved off-chain performance and securities, just in time for Hydra Masterclass next week. So pretty cool stuff going on. Now, I do want to kind of highlight that 1 million transactions per second is not what it kind of is labeled at necessarily. 1 million transactions per second is just a theoretical number. It's not actually what you're going to end up with. Basically, the idea of Hydra is it produces more transactions as needed. It's not something that you're going to just have straight out of the box 1 million transactions. It's a flat 1 million or anything like that. Essentially, it scales with the demand that grows, right? So as you need more transactions per second is what you get. If you do not need them, then it takes them away. You don't need it, right? There's no point in kind of running at 1 billion miles an hour when actually all you need to do is run at 1 million miles an hour, right? So it's important that we understand that this is actually a really sophisticated system that scales to what is needed rather than just being this idea of 1 million transactions per second. Essentially, what it's going to do is actually surpass 1 million. It's 1,000 transactions per node per second. And so the more nodes that are there, the more transactions per second you can theoretically achieve and so forth. And so the million sounds good, but let's be realistic about it. If you only need 700 transactions per second, then you're only going to have 700 transactions per second. If you need 300,000, then you'll end up with 300,000 and so forth, right? Understanding that's quite an important one. But ultimately, yeah, it's good news to see these things. We'll talk about these stuff as well, but for the most part, maybe I'll leave that for another day. Moving back to kind of the exchange side of things, there's many different exchanges across the kind of crypto landscape. And one of the big things that I like to talk about at the moment is that in these bearish markets, it's important that we get registered on as many different exchanges as we possibly can. And the reasoning and the rationale behind this is quite a logical one. In a bullish market, and any veterans of the bull of the crypto space in general will know the bull markets can be incredibly difficult from trying to log on to these platforms. Some of these platforms simply cannot cope with the millions upon millions of people trying to log on to sell their cryptocurrency assets. And so what you find is these platforms go down. You can't log on, you can't sell, right? And so one of the best strategies to kind of mitigate against this is not just hoping that these platforms sort out their bandwidth issues, but actually kind of doing yourself a solid favor by setting yourself up on many other platforms so that you have backups of your backups of your backups. Essentially, if there's a new exchange, I make sure I'm registered on it. I make sure that I am familiar with how to deposit both fiat and crypto, and how I can withdraw fiat and crypto. Do I need to do KYC? Do I need to link my bank accounts and so forth? And get familiar with the platforms. How do they operate? How do you use them in the most efficient ways possible as well, and test them. We test putting money on, taking money off, and getting familiar with them. And you do this because it allows you to have flexibility in those bullish markets. Your favorite cryptocurrency exchange might go down, but at least you'll have a backup. Maybe your backup goes down, you'll have a backup of your backup and so forth. Now, personally, my go-to platform at the moment is BitGet. I use BitGet for 100% of my leverage trades and 90 to 95% of my spot trades. This is something that will not be for everyone, but I find that BitGet is a very good platform and easy to use platform. And so therefore you might be one that you guys want to check out as well. There's an affiliate link in the description down below, and not just for BitGet, but for many other platforms as well. If you do sign up using those links, you are going to be eligible for various different rewards. BitGet, for example, are offering up to $8,000 depending on how much you deposit and trade on the platform. It's important that you understand the risks that are associated with trading though. Do test out some demos or some paper trading before getting involved with real cash and things like that. But make sure you get registered, make sure you get familiar with how these platforms work, understand the risks and all that kind of good stuff, and do yourself a solid favor by getting yourself ready for that bull market by doing the legwork of strategizing about how these things operate in the bear market. Let's go down to the trade section. Okay, so we're talking about this potential theoretical trade. I did not take this trade, by the way, guys, because I do think we are potentially going to be bouncing upwards more towards 26 to 27 cent, where we can take advantage of jumping back down. Now, essentially, we are looking for our low target range. We are looking to come down towards that 22.9. So this is a good trade. Now, if anyone did kind of jump in on this on the way down, then I think you're in some pretty good profit at the moment. Ultimately, from our entry, at least a theoretical entry, we're down about 3%, but I suspect actually we've got to move down to about 14% to the downside. Ultimately, this is a very profitable trade, so you do not need to be using much leverage, in my opinion. A 5x is more than enough leverage to kind of see some very nice juicy gains. Our stop loss must be above the wave 1 low point, because that would basically break our structure and prevent us from moving down into these lows. So for the most part, everything's looking pretty good and pretty juicy. I do suspect we'll bounce up a little ways before we continue going down, but that was kind of covered in the TA that we did in the video earlier. Ultimately, from a trading point of view, I think this will be something that will be quite profitable, but it's good to have good risk management. Make sure they've got a nice tight stop loss. At the moment, this is a risk reward ratio of about 2.6 on this one, with entry being at 26.8. Take profit at 23 and stop loss at 28.2. It gives us a risk reward ratio of approximately 2.6, meaning good risk reward ratio around. Again, small leverage. We're not going to lose terribly too much if this were to go against us. And again, we don't have to win that many trades to be profitable on the long term. Right? We're not looking for crazy 100x leverage positions and all that kind of nonsense. We're not gambling here. We're using good structure with an approach with good risk management that allows us to profit from these potential trading opportunities. Again, more of this is covered with our members down in our Discord server, so why not check out membership.𝗕𝗘𝗪𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏 to become a member and see what's going on down there. Just bear in mind though, guys, I'm not a financial advisor. I cannot offer you financial advice. All I can do is give you my thoughts and opinions on the data in the charts as I personally see it. And if you do have access to a financial advisor, it's important that you kind of consult them and do what they tell you to do. Don't just listen to a guy on YouTube, right? That's probably not good financial advice. So yeah, I am just a guy, and this is how I tend to do things. You do with that information as you see fit. Guys, I'm going to wrap this video up right there. If you found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe. If you haven't yet joined us in Discord, what are you waiting for? Check it out. Linked in the description down below. Until the next one, have a fantastic day.